The financial markets are supported by a foundation of lies and mistruths. There's no way around this. Have there been any moments in the market where reality has been allowed to show its true self? Of course not. If it would, trading would be halted within seconds. Instead, we see a complete deterioration and a cloudy and murky view of what is supposed to be visible and transparent. Good luck. You came here for the truth, so let me unveil that for you. Today we're going to look at an issue that's on the minds of many, and that is, what will crash first, stocks or bonds? Let's begin. We're looking at an article out of the Huffington Post. The most compelling picture on the absurdity we have arrived to, looking at the US 10-year Treasury bond, the yield of Italian 10-year bonds, the yields of the junk bonds in Europe and US companies, as well as the QEs of the ECB and the Fed. That's what these charts are going to show you. Look how wacky this has become right now. This is current information. It implies that the default probability of an average European junk-rated company is smaller than that of the US government. This naturally is just absurd, and it only tells the tale of massive central bank induced market distortion. The pricing of risk in the normal sense does not exist in the capital markets anymore. I just did a video recently talking about how the markets are broken, and this really solidifies that. Look at the chart. You can see that the US apparently is somehow more risky than junk bonds out of Europe. How in the world is that the case? And of course it is on a minuscule level, but it shouldn't be anywhere close. We are talking about the worst of the worst that Europe has to offer compared with the US. And it shouldn't be anywhere close, but that's the way it is. And this is what happens when you intervene in the market to the way they have done. They have been doing so, breaking the market, knowing that what would happen. I'm sure that the Federal Reserve has created all their models and they knew exactly what would happen before they did it. And I'm sure they'll know what happens in the future. But yet they went ahead and did so. They're buying time before they can implement their next monetary system. This shows you how broken these markets are. But as long as people keep pouring their money in, nothing to worry about. Global private non-financial debt from 1999 to 2017. Lo and behold, it has gone up. Regardless, with or without China, they've both gone up considerably. Now, you're looking at China obviously contributing a lot to this in recent years, particularly since the financial crisis, but it has been going on for quite a while. And all I know is that all countries are engaging in the same policies. So let's look at this. Ships passing in the night. GDP growth and growth of bank credit in China. Look at what happened right here ever since this moment in 2015, where the shadow and traditional banking assets had gone astronomical and the GDP growth not exactly the same direction. Not even close. It's interesting to see how shadow banking in particular has really expanded. I mean, we've got dark pools, we've got derivatives, we have this shadow banking, we have all these things that lie underground. And we're not allowed to know what's going on. Of course, that's the purpose of them. We're not allowed to know about the insider trading. We're not allowed to know about everything that goes on to such a high degree. We find out these little bits and pieces, And unfortunately, it's not enough sometimes to put everything together. It's a really big puzzle. But we do what we can. Bonds versus stocks. It's an interesting chart, actually. Look at what happened with the US going back to this level early 2011. Now you've been seeing, I've covered it here on the channel and elsewhere, of course, what has happened with bonds recently. I mean, look, this dip clearly from the end of 2016 has been coming downward, and you are noting that things have changed recently. And have bonds become cheap when compared to stocks? Is it stocks that have become too expensive? Is it bonds that are becoming too cheap? Or is it a bit of both? Well, I've been looking at this for quite some time, and we know that the money from the quantitative easing has been flowing more so in the last couple of years, more so into equities rather than all this fixed income bonds and everything else. We've been seeing that. We've seen other central banks. Bank of Norway is doing it. You're seeing the SNB doing it. And they're putting money into US equities rather than the bonds of the US. Now, the Federal Reserve had been buying up a lot of this garbage in QE 1, 2, and 3. But since QE 3 had finished, that program, 4.5 trillion, has been, stagnated. They haven't been buying any more, supposedly. And so it's staying at that level. Nobody else wants it. Nobody else wants to touch it because already there's $4.5 trillion worth. Let's move on to the equities. Let's get some growth. Let's let it happen. And that's what's going on with stocks. They've become overvalued even in relation to the most ridiculous bubble in history, the bond bubble. All right. Quickly here, just a little bit more. I noticed this. I just want to talk very quickly about this. Look at these algorithms snapping. Now, yes, it followed a trend. This happens to be US crude production. I just wanted to show you the shape of this. Look how dramatic these dips occur. The algorithms have gone crazy. Now, I don't know what happened in these craters here. I don't know what it is, okay? I don't know how it works. I don't know exactly who pulled the trigger on that. I don't know which company or who was responsible for it. But what I do know is that that's not natural. That's not supposed to happen. And one day we could see the market coming down by, enough to basically shut it off for a period of time. And it might reopen again, and it might happen again. And it might reopen again, and it might happen again. And there's no telling how that will all affect everybody. Maybe they'll start to lose a lot of confidence very quickly. That worries me. And last but not least, this is written by Lou Rockwell. How government inaction ended the depression of, 1921. Depression of 1921? Well, a lot of people don't know about the depression of 1921. What happened? Well, I talk about this in my first book. And in fact, it's basically the theme of the first book. I always reference it. Essentially, there was a depression. The Federal Reserve was quite new at that time and didn't act, thankfully. As a result, everything was restored back to normal and booming again into the roaring 20s within approximately a year and a half, if my memory serves correctly. A year and a half. So yes, it was terrible for a year and a half. Absolutely. Maybe a year. But by the time a year and a half came back around, hey, everything's doing well again. Isn't that a better thing to do than to have a market that's basically a zombie for a decade and you have to engage in so much, give away all your power, all the financial assets and everything else away from the people and into the hands of, these corporations and the elite. But of course, it's designed like that on purpose. So I always reference this particular instance. And a lot of people, I've commented on this before in other videos, and I've been told that I was wrong because there was no crash in 1921. Well, for those who believe that, it's time to pick up the history books and learn a thing or two. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. Another thing that you can do is comment on these videos. I do appreciate that very much. I'm always commenting back to people. It's not just commenting just for the sake of it, trust me. I do read the comments. I do try to be actively engaged with people. Just to let everybody know, I am very far behind on my emails, but I will get back to you. If you have emailed me, if you have contacted me through there or Patreon, I will get back to you. It just, there's so many, and I will get back. It's just a matter of time. Hang in there. So that's all. If you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.